You've been told you need millions to retire. But what if that's just a lie? What if the real way to escape the rat race isn't more work, it's smarter rewards? I discovered something unusual. For the first time ever, HBAR is offering staking returns that actually allow you to earn money while you sleep. In the next few minutes, I'll walk you through exactly how much HBAR you need to build your own passive income engine. Miss this and you'll keep trading time for dollars forever. If you're interested in this topic, hit the like button, subscribe, and type interested in the comments, and I will give you a heart. Let me tell you something nobody in traditional finance ever admits. Retirement isn't about age. It's about cash flow. And the moment you understand that, the entire game changes. Think about it. The reason most people can't retire isn't because they're lazy or even broke. It's because every dollar they earn depends on their time. You stop working, the income stops too. That's the system most of us were trained into, a never-ending treadmill disguised as security. But what if that system is broken? What if you could step off the treadmill without stepping away from income? That's where HBAR enters the story. When Hedera quietly increased its staking rewards, the math behind financial independence shifted. For the first time, an average investor, not just whales or early adopters, could build passive cash flow from a network that's actually built for scale. No hype, no mystery coins, just cold, programmable yield from enterprise-grade infrastructure. Here's where your brain starts recalibrating. At 2.5%, $10, 0 cents, zero in staked HBAR can generate $250, 0 cents a year while you sleep. Add compounding and periodic price appreciation, and you're not just holding tokens, you're building a micro income engine. But here's the secret every seasoned investor learns too late. The numbers don't work unless your conviction does. See, when you hold a volatile asset like HBAR, the temptation to sell early is brutal. That's why staking rewards matter. They turn patience into profit. Every 45 seconds, your balance grows. Not by much, but enough to remind you that your time has finally stopped leaking through a clock. And while everyone else is panicking over charts, you're collecting small digital paychecks from one of the most energy efficient ledgers on the planet. Remember when Bitcoin miners used to brag about 7 transactions per second? Hedera processes 10 0 plus TPS at a fraction of the cost, and with a governance council that includes Google, IBM, Boeing, and Standard Bank. That's not theory, that's institutional validation. Now imagine this. Instead of waiting for Social Security or a pension, you build your own private fund. Each stake reward is a dividend. Each compounding cycle is a raise, and every uptick in HBAR's price multiplies your yield. But don't get comfortable yet, because this story only works if you keep watching. There's a twist coming, and it changes how much you really need to retire. Most people run the wrong equation. They calculate how much money they need to stop working, not how much yield they need to keep earning. And when you flip that formula, when you stop thinking in lump sums and start thinking in flows, retirement stops being a fantasy. It becomes math. So here's the question that should already be echoing in your mind. If 2.5% APR can generate income while you sleep, what happens when HBAR itself 10x's in value? Don't answer yet, because in the next part, we're going to build that exact scenario, the realistic mathematical path from staking yield to financial freedom. Here's the part where numbers stop being theory and start being transformation. In part 1, we talked about how staking flips time into money, but now we're going to scale it. Let's say you hold 25 0 HBAR, roughly $4, 0 cents, 0 USD at current prices. At 2.5% APR, that earns you about $100, 0 cents per year. Not much yet, but remember, that's passive. You didn't trade, you didn't flip, you didn't gamble. That's $100, 0 cents you didn't have to clock in for. Now imagine compounding that over 10 years, and HBAR's price doesn't stay 16 cents forever. If it climbs to $2, 0 cents, one of the conservative targets based on its previous growth curve, that same stake becomes $50, 0 cents, 0, earning $1, 0 cents, 250 per year while you sleep. That's the quiet revolution most retail investors miss. They're so focused on the moonshot that they ignore the machine. But the wealthy, they build machines. They know compounding yield isn't about getting rich overnight, it's about staying rich forever. And HBAR's network makes that math work. Why? Because unlike speculative tokens that promise yield by minting more inflation, Hedera's staking rewards are powered by actual transaction fees and ecosystem growth. Real utility. The more enterprises use Hedera for tokenization, DeFi, and stablecoin payments, the more reward flows back to you. Now here's where it gets fun and dangerous. If you've ever played with a compound interest calculator, you know how quickly the curve explodes. A $10 0 cents zero stake compounding at 2.5%, while HBAR price rises 25% a year, turns into $100 0 cents zero in roughly 10 years. That's without touching your principal. Add dollar cost averaging, say you buy $100 0 cents worth of HBAR every month, and your position doubles in half the time. Here's the secret no crypto influencer wants to tell you. Retirement is built from boring math, not viral tweets. And HBAR is finally making that boring math work for everyday investors. Because its network is carbon negative, governed by Fortune 500 companies, and backed by a staking model designed to reward long-term conviction, not day trading FOMO. Picture this for a second. You wake up, check your wallet, and see your HBAR balance inched up overnight. That tiny boost is proof that money can move without you moving. And once you see that, you can't unsee it. You start thinking, what else could I automate? That's how financial freedom starts, not with a jackpot, but with a system. Now, some of you might be wondering, yeah, but what if HBAR doesn't move? Fair question. Even then, you're still earning in a deflationary environment. As transaction volume increases and the staking pool grows, HBAR stabilizes while token scarcity rises, which means your real yield can increase even if price doesn't explode. It's the difference between hope and strategy. And here's the crazy part. You don't need millions to start. In fact, the sooner you start, the more time compounding has to work for you. You can stake with as little as 1 HBAR on wallets like Hashpack or Blade, delegate to validators like HeliSwap or SaucerSwap, and track your rewards live. The barrier is so low, it's almost insulting to not begin. So what does this mean for you personally? It means you're no longer waiting for Wall Street to decide your retirement. You're building your own yield curve, one stake at a time. You're creating a safety net that pays you in HBAR, not hope. But before you start dreaming of sipping pina coladas on some beach, hold that thought, because in the next part, we're gonna run the real numbers, the freedom threshold no one else talks about, the amount of HBAR you actually need to replace your income and retire with confidence. Here's the moment you've been waiting for, the question everyone secretly wants answered but never asks out loud. How much HBAR do I actually need to quit my job? Now, I'll be honest, there's no magic number, but there is a formula, and once you see it, you'll never look at money the same way again. Let's break it down. First, identify your freedom number. That's the amount of passive income you need per year to live comfortably. In the US, that number hovers around $40 0 cents zero for most people. If staking yields are 2.5% annually, you can reverse engineer it. To generate $40 0 cents zero a year, you need about $1,600,000 0 cents worth of HBAR staked. Sounds huge, right? But that's today's value. Now, factoring growth, if HBAR climbs to just $2 0 cents, a realistic price considering its previous growth trajectory and ongoing institutional adoption, that same income only requires about 800 HBAR worth roughly $1,600,000 0 cents today. But just $1,600,000 0 cents equals $800 0 cents zero at that price. Still a chunk, but not impossible, especially when you consider compounding, yield reinvestment, and market cycles. But let's be more strategic. You don't need to cover everything through staking income. Most people underestimate how powerful partial independence can be. Imagine covering half your rent, utilities, or groceries from staking rewards alone. That's freedom too. Freedom from stress, freedom from dependence, freedom from living paycheck to paycheck. And here's the other part of the equation, timing. In 2024, Hedera injected 250 million HBAR into the staking rewards pool, effectively doubling yields and proving the network's long-term sustainability. That's not speculation, that's commitment from a project governed by the same kind of institutions that run the global economy: Google, IBM, Standard Bank, LG, and even Boeing. These aren't meme coin developers, these are multi-billion-dollar entities staking their reputation on Hedera's future. Now combine that credibility with macro timing. Interest rates are dropping, the Federal Reserve is signaling rate cuts, and altcoin cycles historically surge right after liquidity returns to the market. Every one of those ingredients sets the stage for the next major bull run. And HBAR is positioned at the heart of it, bridging real-world assets, central banks, and tokenization projects. So instead of asking how much HBAR to retire, ask this: how much HBAR do I need to stop worrying? Because the moment you stop worrying about bills, even just a few, that's your first stage of retirement. Maybe you start with 50 0 HBAR, that's roughly $8.00 now. Stake it, compound it, and as the price grows, your freedom grows with it. You'll start to notice something strange. Your stress begins to shrink as your rewards stack higher. And this is the power of suggestion at play. Once your subconscious experiences real passive income, it craves more of it. You start budgeting smarter, investing earlier, holding longer. Your mindset shifts from "I can't afford that" to "how can I make my assets pay for it?" That's when you're no longer working for money, money's working for you. So let's close the loop. The true answer to how much HBAR to retire isn't a number, it's a plan. Start where you are, stake what you can, and grow relentlessly. Because if history's any guide, the people who laughed at 16-cent HBAR today will be the ones wishing they staked it tomorrow. You're not just investing in a token, you're investing in time freedom, in peace of mind, in the luxury of choice, and that's worth far more than any dollar figure could ever express.